Welcome back to the program. The stock market is again well down. Our dollar dropping below 70 US cents as inflation in America has worried markets and around the world. That we've seen that eventuate. Business Editor Ross Greenwood is with me. Ross, why are markets so worried about US inflation?
The reason is it's interest rates, Kieran, and really the expectation that if rates are rising in the United States and that inflation story really gets out of hand here as well, that we're ultimately going to see even more and faster interest rate rises than what might have been previously anticipated. So, look, I'll take to the stock market first. We already know the market have been down nearly 7.5% over the course of only the past few weeks. So here it is again today. As we speak, it's down by another 120 points, so back below that key 7,000 mark for the ASX 200. That's a fall of 1.7%. And I should also tell you that that fall has accelerated during the day. And the reason for that has largely been big falls in the Asian markets and expectations that the US markets will fall. Our dollar has also fallen well below 70 US cents, currently sitting around 68.8 US cents. But this is the reason for that, and that is looking at that inflation in the United States came out overnight, 8.3% in April, so still well above that. It was down a touch from the March number, but if you go through the price rises, this is where you see similarities with Australia. So let's say, for example, some of those price rises, petrol, 43% increase in the past year, energy, which is household gas, up 30%, used car prices up 22%. We keep on going here. There's food prices, even there, much higher, 9%, electricity by 11%. But the one interesting one that I spotted out there was really just even looking at the price of travel. So the price of travel has jumped by 18% in 1 month in America. That's for an airline ticket. And if that sort of, if you like, emerges here in Australia, that is a part of the inflation story that we haven't seen yet. And that also will add to that story for rising interest rates into the future.
So which stocks have been most affected on our markets here?
So the tech stocks have been absolutely hammered. So there's a group of stocks here called the wax stocks. This is them. So there's WiseTech down 6%, Altium, a chip maker, down 13%, Xero down almost 12%. The other one that's not included there is the old Afterpay business, which is now called Block. It's down by more than 16% on the market today. And the reason is these companies do not make a whole bunch of money. It's priced into the future. If interest rates rise, these businesses are technically worth a lot less. That's the reason why they're being hammered on our markets today in particular. But look, it's banks, it's pretty much everything that's well down right now, Kieran.